The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 10th, almost said September, August 10th, wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets, what the buyers and the sellers, what the bulls and the bears are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now's not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Of course, you can send me a message in the Tiger's Den if that's where you're at, or send me an email. I'll do my best to get to your email. There were a couple emails that came in late yesterday afternoon that I didn't get a chance to, or not totally late, but just simply didn't get a chance to see them till they on my system. We're going to go ahead and answer those first thing this morning. But first, this afternoon. First thing, though, we're going to take a look at what the markets are doing and why, and exactly what's going on. So let's go ahead and get the show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is trading down 27 points at 18,506. S&P is off 4, trading at 2177. NASDAQ Composite down 16 points at 5209. Russell is off 7 points at 1224. The DAX closed down 42 points. The FTSE was up 15. Gold is up $4. Silver is up 33 cents. Light sweet crude back 81 pennies, trading at 41.96. Coke is the leader to the upside. Coca-Cola bottling up 12.60. That's about 9%. Ralph Lauren Polo, the guys who are have all the Olympic clothing out there, they're up 10%, 960 to be exact. To the downside, Orbital ATK, Orbital Attack. Actually, I don't know what ATK stands for. Probably should, but it's down 20%, $18 to the downside. Myriad Genetics up 34%. Holy cow. The jazzy one, Jazz Pharmaceuticals off 5%. That's off 770. So let's begin with what have the markets been doing, because we saw the markets move higher, then we saw a swift move to the downside, and really all of the 30-minute charts, in essence, were doing the same thing. Yesterday, we spent some time on the NQ. Makes sense that we would take a look at that first thing today. Now, when we take a look at patterns, right, that's what I'm going to be teaching, really. When you take a look at, what I'm going to be teaching this evening, between 5 and 6 o'clock. Of course, if you can't be there, you don't have to worry about it. This is a workshop that I'm hosting. If you'd like to attend, I'd love you to attend, because this is going to be a great workshop. It's just simply, and I'll give you the details, whereas maybe some politicians don't give you the detail. They say things are great. I'll tell you some of the reasons why it will be a great workshop, and why most people, if not all, should really attend this. Now, if we take a look at patterns, the question is always, when is it that they complete? And it doesn't matter what pattern it is, by the way, that you're using. You don't have to use Stevie's patterns. It doesn't have to be a lightning bolt, an A to B equals CD. It doesn't have to be price relative strength divergent. It doesn't have to be a seventh wave. You could be using Bollinger Bands. You could be using an average true range system. You might be using, we know guys are using the parabolic SAR. Whatever it is that you're using as a system, what you really want is you want the market to communicate to you when that pattern is really complete. And there is one way that the market does it. It's a technique. It's a secret. It's something that very few people use. Now, subscribers of mine, they use it. That's how you get into the workshop. That's easy enough. We've taken $100 off of that first month for you to be able to do there. So the education you get from it's, really what I'm going to be teaching is a master trader course in 1 hour. course, you might say, how can you do that? It's pretty simple. I step back and say, you know what? I was in all of those shoes before, no matter what level you're at. And I just look at it like this. If it were me attending class, what would I want the master to teach me? What would I want that individual to accomplish in 1 hour so that it would truly assist me and take me to that next level when it comes to trading and investing? That's how I approached it. And it's for every level. It doesn't matter whether you're a beginner and this is the place that you're starting, or whether you are a senior, so to speak, whether you are an experienced trader. I promise there's going to be some. And so by doing that, it's kind of like taking all of the knowledge with regard to Japanese candlesticks, by the way, and condensing it into a TED Talk, which are normally 18 minutes. I've gone beyond that. We're going to do, in essence, 3 18-minute deals out here because it's a 1 hour course. So in the NQ, what was the NQ doing today? Why did it stop where it stopped? Why has it bounced since then? Well, here's what it was doing. It was forming, and this is a 30-minute chart for the NQ, forming an A to B equals CD pattern. The A point was out here at 11:30. This was yesterday, on August the 9th. That's your A point. Your B point is a nice little hammer candle that formed last night at 7 p.m. What's a hammer candle? Hammer candle is a really significant candle that you want to understand, you want to learn. It's great, especially when you're able to use that as anchors for swing points, because we know that when we see it close below a hammer candle, if you're long, you're wrong. Now, you have to make sure that you understand exactly what Stevie means. That doesn't mean that the world is falling. It means don't be long that position or be anticipating that there's further move into the downside, especially when it's a hammer candle. The question is going to be where. Well, in this case here, the where, we just simply use a measuring tool. That measuring tool is nothing more than our lightning bolt pattern, our A to B equals CD. So knowing that we began seeing a retracement, this retracement began here at about 5:30 this morning. And we can always adjust our C point of any type of A to B equals CD pattern. The one-to-one projection was 47, 74, 50. This is the A to B equals CD to the downside. If you're watching us on TigerTV, of course, you got this in HD. You're seeing the pattern explode it up a little bit, make it a little bit easier, even for you to see. Maybe this will get it even better. Version up there. Even better now. Now we've really got this thing large out here. Of course, at 47, 74, 50, just because that was the one-to-one, does that mean that's where price is going to stop? Somebody wanted to buy the market who may not have known the technique, the secret, the nuance, the most important way to master probability. They might have gone ahead and put a buy order in at 47, 74, 50. I'm here to stop you from doing that. That's really what the workshop is about. Is to teach you to not do that. And the reason to not do that is because theoretically, I wish I could run an absolute test on this that says that 60% of the time the market makes a one-to-one A to B equals CD. 60% is no better to me. Yeah, you can make money on it. But I want you to make more than just make money on it, because let's face it, trading and investing is a psychological aspect, and I don't want you to be demoralized by saying, I learned the pattern and it's not working. The reason that it wasn't working is because, only 60% of the time is a one-to-one. The other 40%, it's going to make an expansion. How do we know when the expansion is done? The bulls will show up. It is simple as that. And that's the hammer candle that formed right here at 12 noon. Why are we bouncing? Because the market was communicating to you and I that that's what it's done. Now we got to go take a look at the outcomes, the 5 different outcomes of every A to B equals CD that are out there. Steve Rhodes with TFNN. Be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're taking a look at the NQ out here, and we know that a hammer candle formed at 12 noon. Nice big bullish engulfing candle that formed after that. It formed a Gartley buy pattern. So in a Gartley buy pattern, really all you need is an A to B equals CD to occur in a nice strong trend. Well, there's no question that we have a strong trend off of the lows back here. This is just simply going back into the August 1st time frame, August 2nd time frame. We can go back even further. So we know the market's been in a very strong uptrend out here. Here is another, and there's been very few A to B equals CD patterns that have formed along the way. Well, we have another one that formed this afternoon at 12 noon. Does that mean we are out of the woods? No. Every Gartley pattern has 5 potential outcomes. And you want to be aware of those outcomes when you are trading. This hammer candle here, that was a signal to go ahead and take a long trade. And then you want to be able to anticipate, well, where is the market going to go? Because you've got to do reward to risk out there to make a determination as to whether or not you're going to take the trade. Because the bottom of the hammer candle is your level of support. If you can't afford, or the risk is too high, is really the way to take a look. I forget about you can afford anything, but if the risk is too high to go ahead and put your stop underneath that hammer candle, then you may not want to enter the trade. You may want to wait to see if price can pull back into the wick of that hammer candle. That hammer candle, by the way, there's 4 different styles of hammer candles. That is a style number 4 out there, which is the weakest of them all. That doesn't mean that it won't hold, but you want to make sure that you can take a look at a hammer candle and understand, and I'll explain all that this evening, but that is really important. Now, every Gartley buy pattern. Here's what else we know about the 30-minute charts out here. Not to belabor on it, but this is where our information is really coming from at the moment. With regard to the NQ, we can see that it's also where that hammer candle form was right into the bottom of a nice little rising price channel out here. So the price channel is still intact inside the NQ. It is not inside the ES, so we have some wavering messages out here. And if price closes below that hammer candle from 12 noon, that's going to tell us that this shorter-term trend from August 2nd, that's over. That's it. It's kaput. And that could lead to, who knows what, that could lead to a brand new change in trend out here. But the 5 different outcomes, we're going to take a look at outcome number 1. And that is just simply taking a look at the 0.382 retracement of the A to D point. So here we've got the high at about the 11 to 11:30 session on August the 9th. down to the low of that hammer candle. This, again, the NQ we're looking at. So we're going from 48.0775 to 47.6725. Outcome number one, you would have guessed it, the 0.382 retracement. You have to anticipate that that is where buyers and sellers are going to get on and off the elevator out here. Those who really wanted to short, that would be your first point of attack at 47.82. Did price get slightly above it? Yeah. And did it hold, the 0.382 level hold, or did the price move on? No, really, it held out here. Now, the next level that you want to be watching inside the NQ. So level one has been attained. Now there just may be a retracement underway. Same kind of retracement, right from the low of that hammer candle. Let me do this. Let me turn this one off, but I don't want to have to redraw it and waste your time. So I'm just going to turn that one off. And so now what are we watching for in any kind of a pullback? Well, we're going to just simply look for a retracement off the bottom of that hammer to the high that's been put in so far. So to pull back to 47.77, if you're bearish, don't start licking your chops. Or 47.73 is your 0.618 level, and it's nothing more than a test of the top of that hammer candle out here. You can't lick your chops on the short side until you get it close below 47.67.25, because then, right, if you're long, you're wrong. And we would go back to the charts. We would look for the next most significant swing point, and that would become our target. You say, well, where is that at? That's where the breakout occurred. That's all the way back here at 8:30 morning, August the 5th. That's around 47.47. That would become your next target. But that's how these things work out here. We don't have to worry about outcome number two. Well, I can tell you outcome number two on a move to the upside out here is to the 0.618 retracement level, 47.92. But any closes today above 47.85.50. Our short-term, maybe long-term, bullish for the NQ. Any closes below it starts to get a bit questionable out here. Now, I mentioned the ES Mini, and it's, I thought I mentioned it. If we take a look at it, the same style of rising price channel has clearly broken. So the question is the bounce is simply going to, if there's going to be any further bounces, it's simply going to go ahead and take us back up into the bottom of that rising price channel out here. I don't know, but here is the same pattern on the 30-minute basis. Here is the Gartley buy. Here is the A to B equals C to, again, this beginning at about 11:30 yesterday, down to the hammer candle at 3 p.m. 12 to 3 would be 15. Yeah, 3 p.m. all the way up to this high out here. Looks like that high was at 5:30 this morning. You can see it made, just about a bottom 1 to 1.272 A to B equals C. Nice bull sash candle that formed the bottom out there. But right now, the ES probably gives us the most information because we're trading all the way back into that little swing point that formed here at 12 noon. So perhaps by the time we're off at 2 p.m., we'll get a feel for what the market wants to do as its next move, just simply by taking a look at those shorter term charts that are out there. Okay, now let's get to some of the questions that were asked of me that I didn't get to yesterday. The first is going to be for Larry, and Larry wanted to take a look at Target. Larry, I apologize because I don't know what you wanted to look at Target for. Meaning, I don't know if you're long, if you're short, or what it is. So, hey, anytime you guys send me an email, the more information you give me, the easier it's going to be for me to give you that information or my take on that. So, if we take a look at Target, I had already pulled up this chart prior to the this little segment here just to see what I could see. Now, this is really a blank chart, right? Was a blank chart with volume bars on the bottom. Now, why is this blank chart important to us, or what do we really look at first on here? What my eyes go to, they simply go to the gaps. If I turn off all those lines, let me do that here, and we just really do start with a blank chart. We'll just turn all these things off. The question is, what is it that you're going to focus on first? And what I focus on when I see an individual stock chart specifically, and I'm referring to the stock versus like an ETF, right? An ETF has an underlying instrument. You have to anticipate that there's going to be gaps on those charts. Do they have as much meaning as an individual stock? The answer is no, because when things really gap away, there's a significant bearish or bullish message that is involved with it. In the case of the ETF structures, they're just catching up to whatever the futures contracts did overnight. From my point of view, they do not have as much meaning. Taking a look at it, and best example is this, take a look at those who trade the GLD and pay attention to the gaps out there. They are meaningless. It's not that they don't have some meaning, but they don't have the meaning that this target chart has with regard to its gaps out there, because the GLD is only being traded for basically, 6.5 hours versus the gold contract nearly 24 hours in the day out here. So the gaps are just simply catching up to what has been taking place since the open and close of the actual New York Stock Exchange. So now what we pay attention to is, hey, what has price done? Well, the first thing that shows up on my eyes, your eyes as well, I believe, is that is where did price get up to, and why did it stop there, and what did it do? And right here now, Larry, I'm referring to this gap down that occurred on May 11th. That had volume of 11.5 million shares. And when price got up to a high on July 26 of 77.38, got right up to resistance. These gaps are our friends, at least for communicating to you and I what the market is doing. It ran right into a wall of resistance with light volume. Now it's pulling back. So we get back to this break for Larry. Let's go finish off Target, see what it's doing out here, and then we'll go take a look at the VIX for Kevin. Of course, I'd like to look at whatever instrument you're interested in as well. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go finish off the chart here for Target. TGT, by the way, is the ticker symbol for Larry. And so, Larry, the very first thing, what Target did off of this high volume low out here that really hasn't been tested. So your eyes ought to go to that as well. And that's the low of 65.50. Pretty good chance that that does end up getting tested. Now, a test in this case here could really be a test of the high 68.82. So we won't know. So that's one likely outcome. Price made it back to its second level of resistance because the first level really was out here on that gap down into that high volume bar, and that was on the trading session of May 7th. So price got above that. Right now it is trading really right on that level, which is, by the way, 73.06. We're trading at 73.12 right now. Here's what we also know about Target. So right now it's trading below its daily TAS market profile. That says if 71.50 fails to hold that support, you would expect price to move back to 68.50, 67, and maybe even the bottom of that high volume bar. That's what I'd be targeting if it gets into that bar at all. It likely, or you'd like it from a bullish standpoint, you'd like to see it testable bullish or bearish. Now, what Target is also doing, if I put the weekly chart up on my screen for you, you're going to see that what Target is really doing is trading in a sideways consolidation, a rather large one, which is nice. And the consolidation is basically from the price level about $84 to down to, I'd say, about $66, 66 and change. So 66 to 84, 76 to 86. You've got about an $18 consolidation. Where's the best buy on this? The best buy is at the bottom of the consolidation pattern. Right now, it's kind of mid-stroke out here, and we know price ran into resistance. So I hope that that assists you with the Target TGT. Now, let's go to Plymouth, Mass, and speak with Tom. Tom, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm doing pretty well, Steve. How about yourself?
Doing very good. Thanks for asking. And tell me the ticker symbol that you actually want to look at.
The JDST.
JDST. All right. And tell me what you're doing, time frames, what you're looking for, what you're thinking here in the trade.
I started nibbling on it yesterday afternoon, and I bought a bunch this morning. So I'm looking what you're thinking your thoughts are on this, and also on the JDXJ.
Okay. So let's do this. Obviously, this is going to be influenced by the direction of gold. I assume it's going to be influenced by the direction of gold. Although this morning, so this is the bearish position, right?
On the junior nugget, yeah.
Yeah, this is the bearish position. Okay, and so you've got gold going higher, so that makes a lot of sense. So the first thing that I would do, Tom, if that's okay with you, is actually take a look at what's going on with gold. Can we do that?
Certainly.
Okay. Now, when you're in this trade yesterday, you're really looking at it as a hold period of what, just a few days or something like that?
Yeah, I'd like to be out by Friday, unless all of a sudden it takes a jump and the dollar moves up. Like that, you know.
Sure. Okay. So the first chart I'm going to put out here, since really we're talking about shorter term type trades, is the top portion of my chart. I don't think you're watching this on TigerTV, right? You're out or driving or something like that.
Yeah, I'm not.
Yeah. But I'm going to describe to you, so that way those folks that are watching, they can actually see what's happening. So I'm showing a chart with the top portion. These are 30-minute charts that we're looking at. The top portion is the gold contract. The bottom portion is the Japanese yen futures. The amazing thing is that these two things correlate better than almost any instrument that is out there. People used to talk about light sweet crude and the S&P 500. This one actually correlates better. And the question is, who's the dog, who's the tail? My opinion is it's the currency pair, the soft currency pair, the Japanese yen, that is the one that is controlling the direction of gold versus the other way around. Either way, when we put these two charts up on the screen, when we get to reversal type patterns, we want to be paying attention to it. And in the case, as gold was making its high out here, so this may be good for your trade, as it was making its high at 930, what the Japanese yen futures was doing on a 30-minute basis, it was making one of my favorite reversal patterns. It was moving higher, doing with less relative energy, and then you had a nice bearish reversal signal occur at 930. So that says that this trade should, if it's going to pan out, it now has the pattern on a short-term basis to start seeing it pan out for you. So that would be, I would say, the good news with regard to that trade. The question and really, I don't know if you've got access to it, but if you can get access to it, I think it would be worthwhile for you to take a look at it and assist you when trading JDST or any of the gold instruments out there. So just really something to consider. So from the real short-term perspective, at least you have a topping pattern that would suggest gold should continue to pull back out here, and you just have to continue to watch that. So does that, knowing that, does that assist you at least with regard to maybe one of the things you were going to ask about?
That's absolutely what I was looking for, and that was one of the reasons why I was buying today on the way down.
Okay.
The JDT. So.
Yeah, so you've got, I can make the case you've got a nice reversal signal. Now, with regard to gold itself on a daily basis, and I know we're focusing a lot of time there, but really we need to, in order to be able to try to nail this type of a trade for you, is what is gold doing? And as gold moved higher today, it ran right into resistance. Resistance for me is Stevie's red line. Resistance is the price oscillator moving up or down. When it's moving down, that's when prices start to move down and can continue to move down for quite a while. It always depends on where prices are moving down, where that price oscillator is in relationship to its zero line. Right now it's above zero, so it says anything that's a move back is nothing more than a retracement. Now what gold did 3 days ago was it broke through the bottom of a rising trend line. This is a short-term trend line, Tom. This is one coming off of the low from May 30th. But nonetheless, it broke through that trend. Yesterday was a test. Today is a test of that trend line. But what gold did was it hit my red line, and that is a normal area of resistance, and that is where it also found, an intermediate term top out here. So as long as gold does not close above 1360.30, I can justify staying in the trade that you are in. So that's the setup that I see. So the daily says we had a test of an important level of resistance, and that held. And the intraday chart, the 30-minute chart, says that we saw a nice little topping pattern on the 30-minute yen futures out there. So right now, prices trading really right at that trend line. So we've got another rejection there. So all that looks pretty good. That's my take on your trade inside of JDST. And I get more information by doing what we just did than really being able to take a look at JDST and tell you what it's doing and why, when I really think that the dog here is really what's going on with gold and the yen futures. Because on JDST, really all that I could do for you is, in essence, pull up the TAS market profiles and tell you you're trading below them right now, and that's not a good thing, which is 430. But I don't give this as much weight as what you and I just did.
Right. All right, Steve. Well, thank you very much. I appreciate your analysis there, and I'll keep my eye on that yen.
Okay, perfect. I appreciate it. Thanks for calling. That was Tom in Plymouth, Mass., and that was taken because he's really a shorter-term trader, and that's why we wanted to also focus on, hey, what's going on the 30-minute chart out there. Now, another question came in yesterday from Kevin, and he was really just asking me, because I had thrown out there, hey, what do you guys want me to look at? And I started talking about a whole bunch of things, international markets, which are important. How about that move in the DAX? But he wanted me to talk about the VIX yesterday. But we might as well talk about the VIX today. So when we get back from this break, how about you and I, we go take a tour on the reading, and we'll go read what the markets are telling us about the VIX index. This is Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back up, folks. Dow's off 31 points right now. S&P is down 5. So for Kevin, let's go take a look at the VIX index. We're going to look at the daily. Kevin asked if I would look at a 2-hour and a weekly chart. So we'll take a look at that. But it's the daily chart here that provides me with the most information. And that is this. We can see that from the high out here in the trading session of June 27th, we saw a nice little gap to the downside on June 28th. Remember, that gap is your friend, tells you about significant momentum in one direction or the other. In this case here, it was a direction to the downside. We already knew that the VIX index was stretching to higher highs, new with less relative energy out there. That's never a good thing. It's never a good thing when the bears show up. It is okay until that point in time out here. And that's, the frustration I think that a lot of people share, at least folks that I have talked to, who have spent time educating themselves. And that's really, look, I applaud you for doing that. I know that you and I share one thing. There's at least one thing that we have in common, and that is we both like to learn. And that's what this market is all about. That's what actually doing this show over the many years here has really afforded me to do, is to, on a daily, because I'm passionate about really everything I do in life, whether it's working out or whether it's eating sushi or drinking sake or, technical analysis of a stock chart out here. If you're passionate about it, and that, I think that comes through. It's pretty evident. I know it really comes through in the workshops that I provide out there. Because, why do anything if you're not going to do it all the way, at least in any event out here. So we know that when the market moves higher, it does with less relative energy. And then we have and so the point that I was really trying to make after speaking with people who said, hey, I've read all these books, and there's these Japanese candlesticks and spoken to people, and I don't see where they really have a lot of meaning. And just along a stock chart, just as individual candlestick patterns that are out there, and I'd have to agree with you. They help you to interpret the market, but the meaning, it is really about understanding the techniques, the tricks, the secrets, whatever word it is that you want to use to really increase your ability to give you a better probability trade. That's what Mastering Probability, my daily newsletter service, is all about. It's really about how to master probability, and that's where I unlock the key to the best use for Japanese candlesticks, and that's what we're going to be doing this evening. So, come on over to the homepage at TFNN.com. Join us for this party. It's going to be a great education. I promise you that. I believe the newsletter is great. You've heard many people call in and say really good things about the newsletter service. So, you know, $49. Okay, it's more than $1 a day for the next 30 days out there. Here's what the VIX index is doing, Kevin. We can see that from that high, we're now down into wave number 6. Now, yesterday was the first bullish reversal signal of significance since the hammer candle, small hammer candle albeit, that formed out here on July 20th. That was a type 4 hammer candle out there. We did see a slight close below it, but we can see that with regard to the VIX index, this is where buyers say there's some value in it. Now, what I'm hoping for, and yeah, you can hope, or anticipate, don't know whether we're going to get it. I like today's action. And why? Because we have made a higher low than yesterday. And that says to me that the VIX index can get to wave number 7. And we get to wave number 7, and maybe that's it. We're not going to get a price relative strength divergent pattern. That I can assure. Well, I can't assure you we won't get that tomorrow. That much I know for sure. I don't see us getting it on Friday either. But it would really be nice to get to wave number 7 out there on the VIX index. That might be what marks the spot. X marks the spot for a decent retracement inside of these markets out here. We may not get it out here. A close below 1166. You're 1203 right now. That would go a long way to. And I'd just like to just close at 1165 or 1166. For those of you that are in control of the VIX, I'd like to see that out there. That would give me more of a comfort level that we're going to see at least. Well, we're going to see a 7th wave. May not be tomorrow, could be Friday, could be Monday, but at this stage here, we're off to a pretty good start. Now, with regard to taking a look at the VIX index on a weekly basis, let me just come over here and see let's go to this chart. And what else can we say about the VIX index here? The current cash contract is at 1203. The futures contract that takes us into, what's J? J is April of 2017. We've got a decent spread. That's 1967. That's the highest contract. Those need to get closer together. One's got to go higher, or one's got to go lower, or both can be out there. I would say that the futures contract is a little bit more accurate than the cash indice right now, so we're going to see a move higher. The question is when. Just simply trying to time the pattern, trying the market with regard to patterns that are out there inside of the market. So with regard to taking a look at the VIX index on a weekly basis, Kevin, for me, this has no meaning. That doesn't mean that there's not any meaning out here. I'm just saying that from my standpoint, as I pull this back, it just doesn't have a whole lot of meaning to me. I can't see, anything of relevance here to trade it. If I put it on a monthly basis, on a daily basis, a whole different story with a whole set of tools out there. But on the weekly, it just isn't there for me. With regard to a 120-minute chart out here, let me put this 120-minute chart out here. And I guess I can do some wave counts. This is coming down from about 3:30 yesterday. Wave number 4, bullish engulfing candle out here. So, we see that bounce. I really think it's the daily, Kevin, is where you and I would get the most meaning in mastering that. That's really what I spent time doing. Of course, it's easy for me to say to discount the 120-minute chart and the weekly when, I'm convinced that focusing on the daily is where we get the most amount of information from. But you see, the truth is I'm open to learning new things. And if I could find, or somebody could show me a pattern on the weekly basis that was consistent, that was really helpful in helping us call the markets or the 120-minute, I'd be all over it, like the expression goes. So I'm just going to stick with the daily signals. Okay, I don't see any other questions, so we got to those. I don't think there was anything in the den, or was there? Wait, there might have been something, and if so, Dano said, yes, Steve, long crude by USO. Can you discuss what we need to see for crude to hold? Yes. And what it needs to close, given a downdraft today, is going to go higher. Yeah, so let's do this here. I'm going to switch. Just give me a moment here, Dano, to switch over to a 30-minute chart as well, and take a look at what it is that we do know. So with regard to light sweet crude, we're going to first start with the daily chart. Where did that go? Okay, it's right here. So we're going to look at the September contract for light sweet crude. This is what you're looking at. So if you are in a bullish trade in light sweet crude, here's what you don't want to see. You don't want to see it close below 41.40 today. That number will change slightly towards the end of the day, but you don't want to see it close below 41.40. Why is that? Well, let me do this here. Let me explode up. Is this the price loss? I don't know what I've got down there. Probably not. It's not. Let me do that on this chart. Give me another moment, por favor. And we're going to put that up on the chart up here because I want to take a look at, where's that price oscillator? I mentioned that earlier. Is it above zero? Is it below zero out here? And it's below zero. And that's the reason we don't want to see it close below that. So let me take this chart off the screen. We're going to still see the same 41.40. That's Stevie's red line out here. That's the kind of red line we give to all the generals, all the buyers and all the sellers in the markets, because we know when you see it close below that red line, it says getting out of Dodge is probably makes a lot of sense. Why do I say that? See this price oscillator, the bottom portion of my screen, it's below zero. There's nothing more bearish than when your price oscillator turns to the downside and it's below zero out here. So 41.40, Dano. That is the place you do not want to see light sweet crude close below. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks, inside the Tiger's Den. Dano said he gets more nervous about the Bears when the VIX crosses its lower Bollinger Band. So if you're Dano, did you take that workshop that I did, or which was probably now a couple of years ago? I do have up on my screen the VIX index out here with its Bollinger Bands. Now, this is not the same Bollinger Band settings that are basically the standard default out here. And so in really analyzing the VIX index to figure out from a trading perspective, from a probability perspective, how could we use it? That's really what it's all about. That's like tonight's workshop. It's all about, I'm not here to teach you about what a hammer candle is and the bullish engulfing and bearish engulfing. Not that we won't. But if that was what the workshop was about, I say don't show up. Instead, it's about how can we use it to increase our probability in understanding that a pattern has completed. To me, that's the whole key out here. Just as in studying the VIX index, that's where I came up with the 50-day exponential moving average and applying it to it, because I sort of got sick of hearing people say the VIX index was low and it meant that the market was complacent. And what they also were saying was that I don't understand why the market is going up. And the reason why I sort of got sick of that was because there was no probability. That made no sense. You and I have done this before. You go back and take a long-term VIX index chart and put the 50-day exponential moving average on it and go back to 2007, 8, 9, 10, 11. Go see when the VIX was trading at 50, because that logic would mean, well, if the VIX is at 50, the market's going to go lower because it's a high VIX reading out here. I mean, to me, that's if you're going to, that's like saying that, that 100% of the people like ketchup, and ketchup is what causes people to die, or something along those lines. It's just silly stuff out here. You'll find that even if the VIX is at 50, if it is below the 50-day exponential moving average, the markets will move higher. Yeah, that's the whole key. So it was that technique. It was the technique of just simply taking a look at the Bollinger Band reading. So I understand, Danny, absolutely. You're right. Correlation is not causation out here. That's from our man, the polar bear out here. And so if we take a look at the lower band out here, which is priced at 1164. Right now the VIX is at 1210. So I understand absolutely, and I have that same I've got that same nervousness about it. It's now the time to act to the short side. I think that we'll know the answer to that, and we'll know the answer to that by watching that 30-minute chart inside the NQ. So this is where we began. We saw the markets move down to a prior level of a set of swing points, find some support, form an A to B equals C to E to the downside. That is a Gartley buy pattern. We know that outcome number 1 has already taken place. We may see outcome number 2 take place. I gave you those numbers. I think the most important number with regard to where the NQ closes the session today. Now, if that low, that hammer candle today gets taken out, then I think that, Daniel, you take that nervousness and you turn that into perhaps a trade out there, because I think that will be the part of the answer key, because as you've put it together, hey, you're a little nervous when the VIX gets above the lower band out there. We know we had a nice bullish reversal signal yesterday in the VIX. Now we know that we have a pattern that in an uptrend ought to hold, and that is that hammer candle that came in at 12 noon. So that is my take on the markets. And folks, stay tuned, because it is Wonderful Wednesday. And that means our man, the polar bear, David White, he's going to be up next. And then we've got the Tom O'Brien Show from 3 to 5. And then from 5 to 6, you've got my workshop that will assist you in mastering the candlestick patterns are most important for you and your trading out there. So thanks so much for being here. We'll see you this evening, or see you on Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.